So, hello my dear future auditors. Hope you all are doing really well. I am CA Supreet Agrawal, your faculty for ACCA AA subject. My friends, first of all, I really welcome you all to this very special session. And why I am saying that this is a very special session, because mostly this is the first day that you are being welcomed into the world of auditing. My friends, I am sure that a lot of you, when you will be qualifying as a professional, you will be working in the auditing domain, and this is your officially first day of knowing the world of auditing. So I welcome you all very dearly. Okay, so now let me tell you that when I entered the world of auditing, I still remember that day, and whenever the date comes, I always think that it's been so many years that I've been into the world of auditing, and it doesn't stop me amazing me even now, because there are so many things to know about the auditing. Okay, so today is officially our first lecture of ACCA AA syllabus. My friends, whenever we talk about ACCA AA syllabus, this is going to be really interesting. And why do I say that? Because when we talk about the ACCA AA syllabus, it does not just have the standards, but it has the practical applications also. It has the mix of MCQs as well as case studies also, and that makes it a very beautiful subject. So I welcome you all to this first session. Okay, so I can see that there are multiple people. Okay, so very good evening everybody. Okay, so now before starting with this thing, I would like to remind all of you that we have discussed in the orientation session that before we start any of our audit session, we have to keep this thing in our mind that audit is the most practical subject written in the most theoretical manner. So whenever we discuss about anything related to audit, what we need to think in mind is that this is a very practical thing. We need to take the real life examples, and whenever you encounter any situation where there is a question in your mind that how auditing would look at this scenario, you are required to ask that to me if you do not already know the answer. Okay, and I would be happy to answer you that in this particular scenario, what would the auditing standard suggest us, how we would be dealing with this situation in the context of audit. Okay, but before we officially start our AA syllabus, don't you think it would be a good idea to discuss certain terminologies that we use in audit? Because this is very important for us to understand that audit runs on the terminologies. You cannot play with the terminologies here. That is, you need to understand all of the terminologies in a very efficient way, and you need to learn them by heart so that you can understand everything that is written in the context. Okay, so now before starting this officially, let us introduce ourselves to some of the key terminologies that we are going to understand in audit and that we are going to encounter multiple times in AA syllabus. Okay, so first thing, the name of the syllabus or the subject is audit and assurance. So first thing that we need to learn by heart is that how audit and assurance are similar and different to each other. Okay, then we will be going towards certain basic terminologies, as in what are ISS, what are FS, what is audit, what are audit procedures, what are certain assertions, what are certain risks, and let me show you how we will be discussing about it. So we will be discussing about international standards on auditing, we will be discussing about certain audit procedures, we will be discussing about certain assertions in detail, and then we will be doing a good discussion on what are risks, what are the types of risk, what is an audit risk. Okay, and let me tell you this, that this discussion of audit risk is going to be very efficient, is going to be very nice to you, and it is going to be very amazing for you. Okay, this is something that you will be learning for the first time. Okay, now after that we will have to summarize our discussion into the basic audit process. That is, what is the basic audit process? Because once you have a deep dive into the audit, you should already have this thing in mind that how you are going to summarize it, or how is this particular thing related to my overall journey. Okay, so that is why what we will be doing in today's session is that we will be understanding about the basic audit process, that is how the audit is conducted in a relevant scenario from starting to the end, which is reporting. Okay, and then we will be discussing about certain terms, which includes material misstatement, which includes types of audit evidences, which includes professional skepticism, and so on. Okay, so this is going to be a very interesting discussion for all of you. Now let's first discuss about this term called as audit, because you all might have heard this term already, that what is audit. Okay, so let me explain it to you technically. Now when I say technically, what do I mean by it? When I say technically, what do I mean by it? Okay, so audit is an independent examination. Now you do not just need to learn, you need to understand it. Okay, so an independent examination, first of all, independent examination of financial statements to provide an opinion on whether they present a true and fair view. let's try to break it down. Okay, let's try to break it down. When I say independent, what do I mean by it? So when I say independent, this means that the opinion that I'm talking about, the examination that I'm talking about would be done by independent parties. Now, when I say independent parties, what do I mean? So when I say independent parties, I mean to say that the people who are directly or indirectly not related to the company, this examination would be done by them. We will be getting to know about it a little later also when we will be discussing about chapter number 4, professional ethics. We will be discussing about that what could be considered as depending on an organization or being related to an organization, and in what scenarios you cannot accept the audit. Okay, so an independent examination as in evaluation against certain criterias. Okay, so you will be evaluating financial statements against certain criteria. Now these criteria are assertions which we are going to cover little later today only. Okay, now of financial statements. Now what are financial statements? Although you might have learned about it in FR, but what are financial statements in general? Can you answer me on the chat box? What are financial statements? Generally speaking, what are financial statements? Can you answer me on the chat box? I can see your chats. Okay, so yes, please tell me, what are financial statements? What does it include? It includes 5 things, right? So what are those 5 things? Can you tell me what are those 5 things? Yes, I can see your chats. Yes. Okay, so financial statement includes a statement of position. Okay, a statement of position which is generally called as balance sheet. Okay, when I say BS, it means balance sheet, and I would be writing BS going forward. Okay, now statement of performance is there. A statement of performance that you might have remembered as either income statement or a statement of profit or loss, right? So I would be writing income statement or statement of profit or loss. I would be writing income statement, IS. Then third thing is cash flow statement. Which we will be generally calling it as CFS. Okay, when I say CFS, do not consider consolidated financial statements. Please read it as cash flow statement unless otherwise is stated. Okay, then there is okay, balance sheet, P&L, CFS, equity. Okay, notes. That's amazing. SOFP. Okay, notes to accounts, cash flow. That's amazing. So the last one is the second last one is SOCI. I would call it as SOCI. Okay, what is SOCI? Statement of changes in equity. SOCI. Okay, now the last one is notes. But please remember that we would be calling it as notes to FS, not notes to accounts. Okay, we will be calling it as notes to FS. So this would be the term that we would be using. For this we would be using balance sheet. For this we would be using income statement. For cash flow statement we would be using CFS. For SOCI we would be using SOCI, and for notes to FS we will be using notes to FS. That is how we are going to spell it going forward. And whenever I say financial statements, you should by default remind yourself about these 5 things. Okay, so these are the financial statements. An independent examination of financial statements to provide an opinion. Now what is the meaning of this word opinion? So for my Hindi audiences we generally call it as Rai, correct? For other audiences I would say that opinion means your advice, your conclusion. Okay, conclusion would be a better word here. When I say conclusion, it would be a better word here. Okay, conclusion. Now, please try to understand one thing here, that whenever we as auditors issue, we issue an opinion. We do not draw any other thing. We issue an opinion in the context of audit and assurance engagements. Okay, on whether they present a true and fair view. Now both of these terms have different meanings. Okay, however we would be covering it today only in the context of our chapter number 1. So when we would be studying chapter number 1 today, there is a separate discussion on what true and fair view means. So we will be covering over there. Okay, but generally speaking, true means honest, fair means I would say in the given scenario, appropriate in the given scenario. Okay, you might have heard of substance over form, right? So that kind of appropriate in the given scenario. Okay, looking at the economic efficiency over the legal format appropriate in the given scenario. Now, please try to understand here that the definition of audit is with full of interpretation. So an independent examination of financial statements to provide an opinion on whether the financial statements present a true and fair view. Although the meaning of the words would be changing when we would be studying it technically, but as of now I have just explained you in a little easy language. Okay, now let's come to assurance. Now this becomes really important. Why? Because I have seen that students generally end up answering audit. There's no issue in that. Okay, but whenever there's a discussion on what is assurance, then it becomes a little difficult for them to manage. So that is why it becomes a little difficult. Okay, so a professional service that improves the reliability and credibility of information for decision making. A professional service that improves the reliability and credibility of information. That is, there should be an increase in reliability. It should make your information more reliable. Whatever service makes your information more reliable, maybe a professional signature that makes it an assurance engagement. We will be having a good discussion about it in our chapter number 1. Okay. Okay, so now let's continue our discussion. So we were discussing about assurance as a service, right? So when I say assurance, okay, so what do we mean by it? A professional service that improves the reliability and credibility of information for decision making. That is, it is not just audit, it is a bigger umbrella where we provide our services, where we provide a professional services for the purpose of increasing the credibility and reliability of any information. Okay, so for example, if we are issuing a report on, say, prospective financial information, that is for the future projections of the financial statements, will that be called as audit? No. But can that be called as assurance? Yes, that could be called as assurance. Okay, if we say that we are issuing a limited review engagement, now what is a limited review engagement? We'll just get to know in chapter number 1. Okay, so if I say that I am issuing a quarterly review of a listed company, say, okay, will that be called as audit? No. But can that be called as assurance? Yes. Okay, so that is the major difference. And what you need to understand first here is that assurance is a bigger umbrella. Under that bigger umbrella there comes audit, okay, as one service. Understood this point? Any questions so far? Understood this point? Any questions so far? Please let me know. Any questions so far? Any questions? Or is it clear? Any questions or is it clear? Please comment on the chat box if there's any question. Okay, then we can move further. Okay, so I hope there are no questions. Okay, just in case if there are any questions, please shoot on the comment box. I'll respond to it. Okay, now let's talk about certain other basic terminologies like ISAs. Now when I say ISA, what do I mean by it? So you might have heard of IAS, International Accounting Standards. You might have heard of IFRS, International Financial Reporting Standards. What are these ISAs? Okay, so this ISA stands for International Standards on Auditing. Now if any one of you is from any of the professional background, you might be aware about standards on auditing. These are exactly like the accounting standards, but they are focused majorly on the auditing part. Okay, so for example, what should an auditor do in a particular scenarios? What kind of evidences auditor should collect? What kind of samples auditor should collect? All that kind of guidance is available under International Standards on Auditing or for the country specific auditing standards. But in our syllabus, since we are studying the INT, there would be International Standards on Auditing. Okay, now when I say FS, what would FS mean? FS would mean everywhere financial statements. What does it include? We have already covered it. Okay, the financial statements. Now let us move forward to a discussion on audit procedures. Okay, audit procedures. When I say audit procedures, what do I mean by it? Okay, after this we will be moving towards certain standard series. Okay, but what do I mean by audit procedures? So see, if I have to obtain evidences for a particular scenario, so for example, let me give you an example that I am into the training industry, you are my auditor, okay, and you have to audit my books. Okay, so what all evidences you will collect? Let's discuss on that. Okay, what all evidences you might collect? Okay, so you know what you can do? You can come to me and say that, sir, we need to inspect certain documents. Now inspection could be in the form of sample verification. You might ask for certain documents, certain agreements, certain invoices, certain supporting documents, and you might do the verification. That could be an example of inspection. So that could be one audit procedure. Yes. What else you can do? You can take the confirmation. Now for what areas this is relevant? So I'll tell you one example. Okay, I'm just telling you one example because we are discussing the basics of audit here. Okay, so I'll tell you one example here. When I say confirmation, what do I exactly mean by it? I'll tell you. Okay, imagine a situation that I have given you my bank statement. Okay, that bank statement shows that I have rupees 10 in my bank account. Okay, but as far as the previous experience of the auditor is concerned, or as far as the previous history of auditing profession is concerned, we have seen that clients have sometimes submitted wrong bank statements. Even there could be certain issues regarding the year-end balances. At 31st March, what is the balance? At 31st December, what is the balance? That could be year-end issues, right? So you know what you do? Instead of just verifying the bank statement, although you take the bank statement also, but what you do is you send an independent confirmation letter to the bank. Independent confirmation letter. So it could be in the form of bank confirmation. That is very much required to understand. Bank confirmation. Okay, bank confirmation. Now, bank confirmation. So you obtain an independent letter from the bank and then you accept it as an audit evidence and you call it corroborative audit evidence. We will be learning about it. When we will move further. So we will be learning about it, that what are corroborative audit evidences. See, we will be discussing about it over here. Okay. Now, when I say corroborative audit evidence is taken for confirmation, then there comes third audit procedure. Third audit procedure is analytical procedure. Now when I say analytical procedure, what do I mean by it? Okay, so there are certain items for which you can set an expectation and you can compare it with the actual, and yet you can say that this item is perfectly fine. For example, in my case, you see that there's an office rent of rupees 50,000 per month. Okay, I submit you the agreement and you can see from my bank records that I have paid 50,000 rupees for 12 times in the year and I have paid 6 lakh rupees. Would you need any other evidence? You have verified the agreement, you have verified the payment, maybe you have verified the invoices also. Any other thing is required? No. So that is known as analytical procedure, where you verify a base document, in this case agreement. You set an expectation that the total yearly rent should be 6 lakh rupees. You have said that okay, 6 lakh rupees has been paid or 6 lakh rupees has been accrued in the books, and you say it is fine. Okay, so that is analytical procedure. Now fourth one is inquiry. Inquiry as in asking questions. See, yesterday in the orientation session, we discussed about that what kind of issues could happen when there would be an audit engagement, right? So asking questions becomes really, really important because you need to understand the environment of the entity as well. Okay, then O stands for observation. Now when I say observation, so where do you perform this procedure? So you perform generally in the stock counts. Now in case of a stock count, when we will be discussing about audit of certain specific items, you will see that we will be discussing about one specific parameter of inventory. One such parameter would be the condition. Okay, and for that, there's a specific audit procedure that is given, that is you have to observe the inventory count. That is, you do not need to do anything, you need to go there, the management would be doing the inventory count. What you need to do is you need to observe, you need to sit there, you need to stand there, and you need to observe whether they are doing it correctly or not. So stock counts, in case of stock counts, observation becomes really important. Then there comes another one, which is recalculation. Now the most famous example of recalculation is depreciation. Depreciation is recalculated because there's a set formula, no? So that is why it is recalculated at the time of the financial reporting finalization, that whether the depreciation charged in the books seems appropriate as per the rough calculation. Okay. Then there is reperformance. Reperformance is generally done at the time of test of controls. What are test of controls? So we will be discussing it right after this, when we will be going towards the basic audit process. Then we will be discussing about test of controls over here. Okay, that is very, very important for us to understand. Okay, but although our job today is not to remember everything, first job is to understand everything. However, if we have to remember it, how we can say We can say ICAIORR. So we can give a mnemonic to it, and that would be called as ICAIORR, and that's how I have summarized it over here. Can you see on the screen? Please let me know in the chat box. Can you see on the screen? Can you see on the screen? Yes, that is how we have summarized it. Can you see on the screen? ICAIORR: inspection, confirmation, analytical procedure, inquiry, observation, recalculation, and reperformance. Okay, that's how you can understand it. Okay, please let me know in the chat box if this is good. Any questions so far? Any questions so far? Yes. Okay, amazing. Okay, great. Now let's come back to this international standards on auditing. So there are multiple series of standards. When I say series, is it like the seasons of a binge watching series? No, it's not like that. It's the numbers. So ISA 200, ISA 210, ISA 220, ISA 250, ISA 260, ISA 265, ISA 299, ISA 300, ISA 300, ISA 315, ISA 330. In case of ISA 400, ISA 400, ISA 402, maybe ISA 405, ISA 500, 500, 501, 505, 510, 520, 530, 540, 550, 560, 570, 580, 600 series. Although 600 series is covered in your syllabus or not, we will discuss about it later. Okay, but 600, 610, 620, 700, 700, 701, 705, 710, 720. Okay, so that becomes really 706. That becomes really important for us. And what is this last one? ISQM. What is this ISQM? What is this ISQM? So let's discuss about each one of them. ISA 200, it is majorly depending upon what are the overall objectives of an independent auditor, that we would be discussing in chapter number 1, and how the communication needs to happen, with management and those charged with governance. What is this those charged with governance? So people with ultimate power and responsibility of the company, the people who are entrusted with setting the strategic direction of the company are called as those charged with governance. Okay, then ISA 300. ISA 300 is planning and risk assessment. ISA 300 is planning and risk assessment. So whenever we talk about understanding the entity's environment, we talk about planning of the audit, we will be coming up here. Whenever we would be discussing about what kind of risk needs to be identified, how it needs to be assessed, we will come here. Okay, ISA 400, when I say ISA 400, so that would be majorly towards risk evaluation, which risk has major potential to convert into a financial statement risk. Now ISA 500 would be talking about audit evidences, what kind of evidences you need to take care of, what kind of audit processes you need to take care of, what kind of audit sampling you need to take, everything would be covered over here in audit evidences. Okay, when I say ISA 600, so it means using the work of others. It could be using the work of management expert, it could be using the work of auditors expert, and so on. Okay, ISA 700 majorly talks about reporting, what kind of opinions could be issued. Okay, what is the auditor's responsibility regarding various other areas like other information. So all of that, the reporting part, would be covered under ISA 700 series. And under ISQM, we will be discussing about quality management. Yesterday in the orientation session, we discussed about what is quality management overall, but let me just give you some light over it. Okay, so quality management basically means that first of all, there are two types of it. One is the engagement level, another one is the firm level. That is, while conducting an engagement, what kind of quality measures you need to abide by. Okay, how do you need to ensure the quality? And when I say quality management for the firm level, then how the firm procedures like acceptance of the client needs to be taken care of as far as the quality is concerned. Okay, so that is very important over here. Okay, I hope this is clear. Please let me know. I hope this is clear. I hope this is clear. Yes. Okay, great. Okay, great, nice. Okay, so now, as of now, we have covered the basic terminologies of international standards on auditing. We have covered audit procedures. Now let's come to assertions. What are these assertions? Is it like the assertive sentence that we used to study in school? Definitely not. Okay, what are assertions? Okay, so if I have to define assertions, I would simply say that these are the criteria. These are what? These are the criteria. Now what are the criteria? For example, if I have to evaluate this remote, can you see this remote? Here? Do you need to remember these numbers? Definitely not. You do not need to remember these numbers. If you see the orientation session, you will find that there's a specific FAQ that we have discussed. Do you need to remember these standards? Definitely not. Earlier ACCA body used to grant certain marks for remembering these numbers, but now they do not. In fact, it is available on the FAQ section of the official ACCA website also. Okay. Definitely. I'll share the number on the chat box. I'll share the number on the chat box right after the class. Okay, or I'll ask the team to comment it right now. Okay. Now. In the meantime, please tell me if I have to evaluate this remote. Okay, this is one remote. Okay, if I have to evaluate this remote, what could be certain criteria? What could be certain criteria? The size of the remote. Okay, the size of the remote, the color of the remote. Generally the remotes are available in black or white color. They are generally available in the hand size. Okay, what kind of buttons are there? Are they smooth buttons? Is it touch screen or what? Right, that could be one. Is it a battery driven or a charge driven or what? Okay, how efficient it is, what is the range? That could be the criteria on which I would be evaluating this remote. Right, if I have to evaluate these two remotes, I would be evaluating based on that only. Correct. Now if I ask you that similarly you have to define the criteria on which you would be verifying, you would be testing the items of financial statements, say property, plant and equipment, what criteria would be there? If I ask you right now, so say there are 5 people in the chat box. Okay, there are 5 people in the chat box. Okay, now if I, yes, features also, Chirag, right? Now if I ask you, there are 4-5 people on the chat box maybe, yes. Now if I ask you right now that you have to audit property, plant and equipment, you have to audit property, plant and equipment, how will you do? What procedures you will apply? Okay, so most of you would come up with different procedures. Okay, some might be covering everything, some might not be covering everything. So there should be certain guidance on what assertions, what risk you need to cover, what criteria you need to evaluate it against. So those criteria are generally called as assertion. For example, if I tell you right now that in case of audit of say property, plant and equipment, what you need to check? You need to check whether there is completeness, that is whether all the items, all the property, plant and equipment of a particular firm or the company that you are auditing has been covered or not. Completeness should be there. Then there should be valuation, as in whether they have been valued appropriately or not, whether the depreciation rate applied is correct or not, whether the accounting entries done are correct or not, whether the relevant items that needs to be capitalized have been capitalized or not. Right, that is very important, whether they have been valued correctly or not. After you have checked that they have been valued correctly, you also have to check whether the rights and obligations are in your name or not. As in, it should not happen that this remote does not belong to me, but it is kept into my books, right? It should not happen. So rights and obligations are there with me or not, whether I exercise the control, whether I am the owner of it or not, right? Rights and obligations. Then you will also see that how is the presentation and disclosure of this particular thing has been done. Presentation and disclosure of this thing has been done, as in whether it has been shown correctly or not. So it should be shown under non-current assets under the assets category, correct, in the balance sheet, whether it has been shown correctly or not. So similarly there are criteria. So completeness, whether all transactions have been recorded or not. Okay, existence and occurrence. So existence generally is used for balance sheet items, and occurrence, whether the transaction is occurred. So that term is used majorly for the same thing but for P&L items. Okay, so SPL items. So existence and occurrence, whether it actually exists or occurred or not. Measurement and valuation, again valuation term is for balance sheet and measurement term is for SPL. So existence is for balance sheet, valuation is for balance sheet, occurrence is for SPL, measurement is for SPL. Okay, completeness is for both. Okay, then presentation and disclosure, whether the items have been presented and disclosed correctly or not in balance sheet or SPL. So again this is for both. Now cutoff, whether the items have been recorded appropriately or not. See, this becomes a very major risk when we come to the official accounting and auditing field. Why? Say there's a truck that has moved from place A to place B. Okay, it has left place A on say 29th of March, to considering 31st March as the year end date, and it has reached place B on say 2nd of April. Now we need to determine the ownership, whether the sale got completed or not on 31st of March. Okay, for that we need to understand the cutoff procedure, that what exactly was the status on 31st of March. Based on that you will evaluate whether the sale was actually occurred or not, or whether it is still your inventory. So that means cutoff, recorded in correct accounting period or not. Then accuracy, whether everything else, whether every other laws and regulations and regulatory framework requirements have been appropriately covered or not. That means accuracy. So I hope assertions are clear. Assertions are nothing but the criteria against which the financial statement items are evaluated. What are those? Completeness, existence and occurrence, measurement and valuation, presentation and disclosure, cutoff, accuracy. Again, cutoff and accuracy are also for both. Okay. Okay, do you need to remember it? Yes. Do you need to learn it hard and fast as of now? No. Okay, you will get to understand it once we get into the process and once we audit different items. Okay. Okay, yes, ready to use could be done. Yes. Okay, great. Yes, fixed asset register could be evaluated. Correct. Okay, so that becomes really important for us to evaluate. Correct. Now let's move further. Okay, see, we have covered the items ISA. Okay, we have discussed FS, we have discussed audit procedures, we have discussed assertions. Now comes risk. Okay, and why I'm smiling at this point is that this is one of the most interesting point. See, if you were there in the orientation session, you must have realized that what we do is risk based audit. What we do is risk based audit. Okay, and when I say risk based audit, first of all, it is very important for us to understand what is risk, right? If we do not know that what is risk, how we can understand that, how do we evaluate risk, how do we assess risk, how do we report on risk, right? So, okay, tell me one thing. If I tell you right now, okay, you have to define this word risk. Okay, risk. If I tell you right now that there's a risk, I'm telling you some sentence, okay, you tell me if it is correct or not, okay, and I need answers on the chat box. Okay, I need answers on the chat box if this statement is correct or not. I am saying there's a risk that I might end up earning 1 crore rupees. There's a risk I might end up earning 1 crore rupees. Does it sound okay or does it sound little absurd? What do you say? Does it sound okay sentence or does it sound little absurd? What do you say? Little absurd. There's a risk that I might earn 1 crore rupees. Is it something very okay or is it like some sentence that sounds a little absurd? What do you say? What do you say? I'm waiting for you on the chat box. Yes, please tell me. This is not a risk, right? This is not a risk. This is looking more like a benefit, right? So that is why this is not a risk. So see, if you have to define risk, first of all, you need to understand definition of risk, how you will define the risk. Okay. So an uncertain event, first of all, the event should be uncertain. First of all, the event should be uncertain. Okay. Although risk is not defined in our audit and assurance syllabus, but I am giving you a detailed definition so that you understand what is actually a risk. An uncertain event would happen and would have adverse impacts. When I say adverse impact, what do I mean by it? That it will affect you negatively. It will affect you negatively. Okay, so that is going to be very important for you, that it needs to affect you adversely. If it is affecting you positively, it is not a risk. Okay, maybe it is an uncertainty, but it is not a risk definitely. Okay, so I hope this is understood to you. I hope this is understood to you. Risk, an uncertain event would happen and would have adverse impact. Now, audit risk. My friends, I'll tell you that whenever I discuss this concept with anybody, okay, be it sometimes those people also who are professionals, they sometimes get confused in this particular term, audit risk. What is audit risk? Okay, so I'll give you one instance, okay, but the only condition is that you have to respond on the chat box immediately, okay, because that would be a one-liner thing. If you understand it, it's good. If no, you have to let it go. So first of all, please confirm on the chat box via saying yes or no whether you will respond to it or not. Say yes if you will respond. I am giving you one case scenario and you will always remember this audit risk. Yes, please let me know yes or no. Yes, yes or no. Yes or no. If you will be available to respond, say yes. If you will not be available to respond, say no. Okay. Yes. Okay. Okay. Now tell me, I am giving you two scenarios. Okay. Just let go of the audit risk concept. Just tell me briefly, what is a bigger risk in your life? What is a bigger risk? I am giving you two scenarios. Okay. If you considered wrong one as the right one, okay, if you trusted wrong one and considered them as the right one, or if you treated the right one as the wrong one, what do you think would be more damaging to you? What do you think would be more damaging to you? Wrong one is the right one or right one is the wrong one? Which one? Which one would be more damaging to you? Which is the bigger risk? What do you say? Wrong one is the right one or right one is the wrong one? What do you say? Yes. Yes. Right one is the wrong one. Oh, so see, first thing. If you consider right one as the wrong one, you will only lose out on a good person or maybe a good concept, right? But if you consider wrong one as the right one, then it is going to have a major impact on your life, buddy, because then you will be trusting with all the secret informations and you will be trusting with the wrong one. So in the long run, this is going to hamper you a lot, because this is not just loss of profit, it is actually a big loss, correct? Do you agree, Chirag here? Yes, yes, yes. This is very, very important to understand. See, our fundamental concept should be clear, be it of life, be it of audit. Okay. So, if you consider wrong one as the right one, that is a bigger risk, my friends. That is a bigger risk. Okay. Okay. First of all, Chirag, please confirm if you agree or not. I'm waiting for another 4-5 seconds for you. Yes. Okay. I'll see your response once you do it. Okay, here. So, whenever you learn the definition of audit risk, you have to keep similar thing in your mind, that considering wrong one is the right one is a bigger risk. Okay, and audit risk is defined in the similar way. Now, let me read the definition of audit risk for you. Risk that an auditor issues inappropriate opinion. It is very particular. Okay, risk that an auditor issues inappropriate opinion when the financial statements are materially misstated. That is, when they were materially misstated. Now, what is the meaning of this material misstatement? We will cover it just after this. Okay, here we will cover it. But when the financial statements are materially misstated, in simple terms, you can consider as wrong or some with some errors. Okay, when the financial statements are materially misstated and you have issued inappropriate opinion, that is what you have done. You have actually said that nothing is wrong when it was actually wrong. That is, you considered the wrong one as the right one. That is the audit risk. Let me again spell it for you. Risk that the auditor issues inappropriate opinion when the financial statements are materially misstated. Risk that the auditor issues inappropriate opinion when the financial statements are materially misstated. That is, when they were wrong, you have considered it as right by issuing the inappropriate opinion. Understood this point? Understood this point? Understood this point? Understood this point? Now, if I ask you that whether vice versa is also correct, that is, when they were not materially misstated, but you have considered it as materially misstated, that is, when they were not wrong, you have considered them as wrong. Is that audit risk? No. Maybe that is a risk, but not the audit risk at least. Okay? Understood this point? Maybe that is a risk, but not the audit risk. Audit risk is when you have considered wrong as right, not right as wrong. Similar to the life concepts. Okay? I hope this is clear. I hope this is clear. You know, I love it when you guys respond on the chat box, because audit is a very interactive subject. If we interact with each other, it would be beneficial for both of us, because we will be able to summarize everything in a very structured way. Okay. Now, so risk that an auditor issues inappropriate opinion when financial statements are materially misstated. My friends, we have highlighted all the keywords in green color over here. Okay, we have mentioned all the keywords in green color so that it would be very beneficial for you when you revise. Okay, I'll also be giving you these notes which would be in the form of board notes. I will be giving you 2 copies of the notes. One would be the master copy where everything would be clean and you can revise according to yourself. Plus, I would also be, if you require, I would also be giving you the board notes. Okay, board notes as in whatever I have written over here, you will get the copy of it, so that once you revise, you get to know that what all things were covered, how we have discussed it, and you will be able to summarize in a better way. Okay. Inappropriate opinion, please explain again. Okay. When I say inappropriate opinion, as in what was required, I have not stated that. Inappropriate means anything that is not appropriate. For example, if I was required to issue an opinion by saying that the financial statements are materially misstated, but I have not issued that. I have said that they are not materially misstated. In this particular case, it would be called as inappropriate opinion. Inappropriate means anything which was not appropriate at the moment. Okay, I hope this explains your query. I hope this explains your query. Please let me know. Yes, please let me know. Yes, please let me know. Okay. Great. Okay. First of all, thank you so much, Era, for being so responsive. I'm really liking the session because you are responding so well. Thank you so much, Arjun, for being so responsive. Thank you so much. Okay. Now, audit risk. Okay. When I say audit risk, although these are all basics of the auditing, and we would again be learning it at the relevant places. Okay. When we will be going for ISA 300 series, we will be learning about all of this. But what I'm trying to do here is I'm just trying to give you an overall structure so that once we revise, you should already know the contents of it. Okay. Now, IR, CR, DR. Okay, that is why at a lot of places I am not giving you the technical definitions which we need to write in the examination. What I am doing is I am trying to make you understand the concept first, and then we will be writing the technical definitions. Okay, although the definition that we are writing, you can use it for your official understanding purposes, but how to write it in the examination, we will also be covering it later on when we will be moving towards the relevant topic. When I say IR, CR and DR, okay, so what do we mean by IR? So IR stands for inherent risk. IR stands for inherent risk. Inherent risk. Something is inherent. Something is inherent. For example, I am inherently lazy. Okay, which means that I have been lazy for all my life, right? Inherently, which was pre-existing. So similarly, when I say inherent risk, these are the pre-existing risks in a business which we consider before considering any internal controls. So for example, in case of my business, the trading industry, okay, there's an inherent risk that students might attend the session without enrolling. There's a risk, okay, there's a risk that is called as inherent risk, which is before considering of any internal controls, these are the risks that is known as inherent risk. How do we define it? Risk of material misstatements in financial statements before considering any internal controls. I think there has been some error here, we'll correct it, no worries. So risk of material misstatement, the content is good, but I think in some spell errors. So risk of material misstatements in financial statements before considering any related controls. Risk of material misstatements in financial statements before considering any related controls. Okay. Now, what is control risk then? So when we will be discussing about the audit process just after this, we will be getting to know about it, that how the control process actually works. But generally speaking, I'll tell you what happens is, see, I've identified a risk. In my case, there's a risk that students might not enroll, but they might attend the sessions. Okay. So what I've done is I have given the encryption in the website that what I need to do is before enrollment into any sessions, I need to take the login ID passwords, I need to generate it. Only then the student would be getting the access to enroll in the classes and attend the live classes, right? So that is my internal control. In case of say face-to-face classes, there might be biometric, that students who have done their biometrics, only then they will be able to attend the classes, they may be able to attend the classes at the classrooms, right? Similarly, every business has control. So risk that the client's internal controls will fail to detect or prevent a material misstatement is called as the control risk. See, what is inherent risk? That if internal controls are not there, what is the overall risk? Now you have identified that via internal controls you have reduced a certain part of risk. What is remaining would be called as control risk. So say, if I say that the total risk was this much, okay, you have controlled via internal controls this much, so whatever is remaining after this much, this would be called as control risk. This was inherent risk, this you have reduced using internal controls, and whatever is remaining is called as control risk. Is that clear first of all? Yes, then we can move to the third part, which is the detection risk. Okay, now let me tell you what is the detection risk. What happens is, sometimes audit procedures might also miss out certain frauds or errors, right? Because there's a concept of expectation gap that we will be discussing at the end of chapter number 1. There's a concept of expectation gap. Now when I say expectation gap, what do we mean by it? What is the actual responsibility of the auditor versus what the public demands from the auditor, or what the public thinks that these are the responsibilities of the auditor. Now what is important for us to understand here is that even after performing the audit procedures in an appropriate way, still there might be certain risk that might be missed by the auditor. So risk that auditor's procedures will not detect a material misstatement would be called as the detection risk. That auditor's procedures will not be able to detect the material misstatement is called as the detection risk. I hope this is clear. Okay. Now let me tell you a very interesting fact. Okay, here, let me tell you a very interesting fact here. Let me tell you a very interesting fact here. You know, if I say audit risk is AR, then IR into CR into DR is called as audit risk. That is the product of inherent risk, control risk and detection risk is called as your audit risk. So tomorrow if there's a question on define audit risk, so first of all you have to give that definition that we have understood, that risk that the auditor issues inappropriate opinion when the financial statements are materially misstated, plus you might explain by saying that audit risk is the product of inherent risk, control risk and detection risk, and you might explain all three of them based on the marks allotted. Okay, and you know this IR into CR is also called as something. It is called as RMMS. What is RMMS? RMMS is a risk of material misstatement. So whenever you say there is risk of material misstatement, you are talking about inherent risk and the risk that remains even after application of internal controls. Okay, yes, can I give example of internal controls? Yes, definitely, I'll give an example of internal controls. See, I'll tell you, in my case I have said that, you know, there's a chance that if we do not apply any internal controls on our website, that anybody could come and attend the sessions, and there's a process of fees payment, but they can breach it also. Then we might end up having 1,000 students who might be doing so. We might end up having 1,000 students who might be doing so, who might be breaching the codes and who might be taking the classes on free of cost basis, who might not be enrolling. Okay, 1,000 students. But my team suggested that what I need to do is I need to apply certain internal controls like encryption, internal controls like encryption, like security, and once I do that, although it would not eliminate the risk, but it will bring it down to say 10 students, that now only 10 students would be able to do so, that they would be coming and attending the classes without doing the due process. Now this 1,000 was what? Inherent risk. This 10 is what? Control risk. Okay, understood? Understood now? Chirag, understood now? I hope this is clear. Please confirm on the chat box if this is clear. Yes. Yes, please confirm on the chat box if this is clear so that we can move forward. Thank you, Arjun. Yes. See, you know, understood. Great, Chirag. Thank you. Now, once you get the board notes, you will really enjoy studying it again or revising it again at your end, because we have taken all the examples and we will be able to revise it also later on. Okay. Now, let's come to the basic audit process. When I say basic audit process, what do I mean by it? When I say basic audit process, what do I mean by it? Let's understand it through an example. Okay. Tell me one thing. If tomorrow I am going to get my company audited, okay, I go to a practitioner, okay, and I tell them that, you know, I need to get my company audited, will you please audit my company? Now that practitioner is my very close friend, or maybe my sibling only. Okay, my sibling is also a chartered accountant, and that person audits the companies, and I went to him and I told him that, you know, I want to get my company audited, will you please audit my company? You know what he'll say? He'll say, my brother, I can do it, but the only problem is I cannot accept it. I cannot accept it. Via professional ethics, once you study chapter 4 professional ethics with me, you will realize why he cannot accept it. Okay, but that tells me that the most important part, or one of the most important parts of the whole audit process, is the acceptance. Acceptance raises a question whether you can accept a particular client or not, or an engagement or not, whether you can accept a particular client or engagement. When I say engagement, it is not that engagement that we study in English or generally consider. Engagement means the professional assignment here, okay? The professional assignment over here. So whether you can accept a particular client or engagement, that is known as the acceptance procedure. There are multiple ethical points to it. You should not be a very close family member. There should not be any familiarity thread that we would be studying as part of our syllabus, okay? Now, even if he or she has accepted it, considering that he is not my sibling, he is a normal chartered accountant or an ACCA, and he has accepted my company for audit. first thing that he or she will do is that he or she will understand the business. Understand the business as in they will try to understand the environment in which my business exists, the internal environment, the external environment, okay, the political environment. They'll do the PESEL analysis, they'll do the SWOT analysis, they'll do everything. Okay, they'll try to understand how different processes like admission, like enrollment, like refund, how different procedure works in my organization. Okay, that they'll try to understand. Once they understand the business, why they are doing it? Because they want to identify the risk. So they are doing it for the purpose of risk identification. They are doing it for the purpose of risk identification. They are doing it for the purpose of risk identification. Okay, I'm looking at the chat box just in case you encounter any trouble. Please let me know. Okay, risk identification. They are doing it for the purpose of risk identification. So say they have identified 100 risks. Do you think they will be applying procedures over each one of them? They'll be testing every such risk. They'll be evaluating every such risk. No, they'll do the risk assessment. When I say risk assessment, what they will do? They will see the potential of risk. When I say potential, what do I mean? How much capable is that risk to affect the financial statements, okay, adversely. So potential of a risk, that is what is the quantum of the risk, what is the possibility, what is the potential of the risk. Okay, they'll do the risk assessment. Whatever they consider as major or significant for us, they will evaluate the controls, they will identify the controls, and then they will do the test of controls, which is commonly called as TOC. So whenever we would be discussing about it next, we would be calling it as TOC. Okay, test of controls. Okay, I think there's a little spell error over here. It's designing. Okay, designing. I'll cut it and write it again. Okay, I'll cut it and write it again. Okay, I'm cutting it and writing it again over here. Designing. Okay, designing and operating effectiveness. Design and operating effectiveness, it is generally said. Okay, design and operating effectiveness. So I'll remove ing. I'll just say design and operating effectiveness. Okay, design and operating effectiveness. Design and operating effectiveness. Okay, now when I say design and operating effectiveness, what do I mean by it? Although we have discussed it a little bit on our orientation session also, but let's have a quick discussion about it. Okay, say in my case, I have identified the risk that students might enroll or might attend the session without following the due process. I have given my security team, the technical team, the task to reduce it as much as possible. Okay, they have applied the controls that every student will have one credential. Okay, one credential. Once they apply that email ID and password, they will be able to log in, and then only they will be able to watch the lectures. Okay, now the design part looks very appropriate. Okay, but they have left a glitch over there. Okay, the glitch is that if that same email ID password is shared with 10 people also at once, they will be able to log in and they will be able to watch the lectures at 10 places together at different parts of the country or maybe the world, and they will be able to watch the lectures again. See here, the design part looks okay. That the control was designed perfectly, not an issue, but it is not operating effectively because there's a bypass rule towards it, there's a bypass way towards it, right? So that means design and operating effectiveness. Design effectiveness means what? Whether the control is designed in such a way that it is addressing the particular risk, and operating effectiveness means what? Whether it is actually operating effectively or not. Okay, I hope this is understood. I hope this is understood. Yes. Okay, I hope this is understood. Yes. Okay, now let's try to understand further. Okay, now there comes substantive procedures. When I say substantive procedures, what do I mean by it? So substantive procedures includes two types of procedures. One is test of details, which we will be calling it TOD in further details, and analytical procedures. Okay, let me answer this first. Are these notes by BPP or Kaplan purely made by you? See, these notes are made by me. However, we have taken the reference from all the publishers, including the ACCA Study Hub and all the other publishers, so that these notes are complete and you do not need to refer anything else for these purposes. Okay, so you will be getting these summary notes. These would be handwritten only, and it is perfectly prepared by me only. So whatever we prepare here, it is after looking at all the publishing materials, and we have summarized it in such a way that you do not need to look at anything else. Okay. Okay, Now, when I say test of details and analytical procedure, what do I mean by it? When I say sample verification, in case of inspection, we said no sample verification, the agreement verification, all of that is called as test of details. All of that is called as test of details. Okay. Then analytical procedure, we have already discussed setting an expectation and comparing with the actual. Okay. So analytical procedures. Now, completion, review, and reporting. Completion, review, and reporting. Now, what does this include? You might have studied about subsequent events in case of your FR syllabus, right? You might have discussed about going concern from your commerce background. Okay, so all of that, the going concern assumption, how whether the going concern assumption is appropriate here in this particular case or not, what are the adjustments of subsequent events that are required, how do we summarize various events, various risks identified during the audit, what are various conclusions, and what is the final conclusion, what is the final effect on the financial statements. All of this would be done under completion, review, and reporting. The review of the audit procedures done, the summarization, the finalization, and finally the report creation and publishing is done at the reporting stage, and finally the archival happens. Now this archival could happen with the completion, review, and reporting purpose, or it could happen later on, but once we finish the audit, the archival needs to be done within certain appropriate timelines. Okay, I hope this process is clear, the basic audit process is clear. Please let me know in the chat box whether this audit process is clear. Yes, whether this audit process is clear. Yes, whether this audit process is clear, please let me know in the chat box whether this audit process is clear. Yes, yes. Okay, now material misstatement. Again, we have highlighted the important pointers or the keywords into green color. Okay, now when I say material misstatement, so there are these two different words. Okay, material does not mean any item here. Okay, material means very simple, anything which has the capability of affecting the economic decisions of users of financial statements. Any item which is capable, maybe it is not affecting currently, but it is capable. Okay, capable of affecting the economic decisions, not all decisions, economic decision, financial decision, money related decisions. Okay, of users, not of everybody, of users of the financial statement. So any item which is capable of affecting the economic decisions of users of financial statement is said to be material. Okay, so in my case, for example, in my case, if I say about my company, if there has been an error of say 100 rupees. Okay, in my company's case, 100 rupees might not affect the user's opinion, economic decisions of users of financial statement. Even if there's an error of 100 rupees, it is not going to affect. Okay, so if there's an error identified of say 100 rupees, it would not affect. However, if there's an error of say 1 crore rupees, that might affect the users economic decisions of users of financial statements. So that would be called as material. So whatever is capable of affecting the economic decisions of users of financial statements, that would be called as material. Okay, now misstatement, difference between what is and what should be. What kind of a definition is that? Difference between what is and what should be. So let me complete it for you. Okay, and it was not left incompleted. I actually wanted to write it in front of you. Okay, difference between what is accounted and what should be accounted for. Difference between what is classified and what should be classified for. Difference between what is presented and what should be presented for. So let me give you an example over here. Okay, if something was required to be classified under current assets, but it has been classified under non-current assets, do you think it is a misstatement? Yes. Whatever you have stated, if that is not 100% correct factually, then it is known as misstatement. So if it was identified under current assets, but it should be reported under the non-current assets, then again it is a misstatement. If something was valued, maybe say at 100 rupees, but it should be valued at 150 rupees, whether it would be called as misstatement? Yes. Whether it would be material, that depends on the quantum of it, that depends on the quantity, amount of it, that depends on the materiality of it. Okay, now this is important to understand the difference between what is accounted, classified, presented, valued, reported. Okay, and what should be accounted for, classified, presented, valued, and reported is called as material misstatement, is called as misstatement. Understood this point, material misstatement? Understood this point, material misstatements? Understood this point, material misstatements? Understood this point, material misstatements? Okay, yes, okay, 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 Yes, I think clear. Okay, amazing, amazing, amazing. Okay, now let's move forward. Let's move to types of audit evidences. Now, when I say types of audit evidences, what do I mean by it? When I say types of audit evidences, what do I mean by it? Okay, let me tell you. There are four types of audit evidences: persuasive, conclusive, corroborative, and contradictory. What do I mean by it? Persuasive, that persuades me to believe something, that is, this might be true. So for example, in case of bank statement, in case of audit of cash and bank balances, I have identified this thing that there's a bank statement which says, the book says the balance is 100 rupees, the bank statement also says 100 rupees. Okay, but is it a conclusive evidence that the bank balance is 100% 100 rupees? No, right? There could be falsification of bank statements, there could be some errors in the bank website, everything, right? So that is why I say that persuasive evidence says it might be true. So example could be bank statement showing the same balance, bank statement showing the same balance, bank statement showing the same balance, that is known as persuasive evidence. Okay, that books are showing 100 rupees, bank statement is also showing 100 rupees. When I say conclusive, what do I mean by it? The bank confirmation. See, once you have sent an independent confirmation to the bank and they have confirmed you independently as per the audit procedures, okay, there's a separate standard on external confirmations. Bank confirmation, okay, they have confirmed you in writing that this person has 100 rupees deposit in a bank as on say the year end date, which is 31st of March 2025. Now, is it conclusive? Yes, now the bank has confirmed you independently, so this is conclusive evidence, that is only this is true, whatever is written. What if bank has confirmed you 95 rupees? Will you consider 100 rupees that bank has submitted to, that bank statement is showing, that that particular books are showing, or you will believe bank confirmation? You will believe bank confirmation, right? So that is conclusive. Then corroborative means evidence to an existing evidence, further evidence to an existing evidence is called as corroborative. In this case, bank statement also showed 100 rupees, bank confirmation also showed 100 rupees. So in this case, bank confirmation is both conclusive as well as corroborative, because it is confirming the information which was anyways confirmed by the bank statement. Okay, so matching balances of bank statement and confirmation, bank statement and confirmation. Now tell me something. Two evidences contradict evidences when unmatched balances of bank statement and confirmation, unmatched balances of bank statement and confirmation. I hope this is clear. But this is very much aligned with your general English. Okay, contradictory, two things are contradicting. Corroborative, evidence to an existing evidence. Conclusive, only this is final. And persuasive, it might be true. Persuasion, right? So it is very much clear and it is very much aligned with your general English also. So nothing troubling over there. Now, professional skepticism. This is one of the most important terms in case of audit. Okay, be it AA, be it AAA, be it audit of any of the professional courses. Okay, you will see this term coming up again and again. Okay, professional skepticism, what do we mean by it? Okay, before learning the definition, let's try to understand it. Okay, now tell me one thing. I'll give you one case, okay, and you tell me what is your trouble over there. Okay, I have told you that what has happened in my company is that I have seen maybe 10 students have attended the classes full, okay, on a regular basis, but they have not enrolled it. Okay, I have 1000 students as of now. Okay, 10 have followed this process. What should be your first question? Tell me. I have told you this information. What should be your first question? Tell me. What would be your few questions? Not just first. Okay, what would be your few questions? Tell me. Let me know in the chat box. What would be your few questions here? Tell me. How you will answer? What kind of questions you will raise here? Will you ask anything else, or is it like 10 students have done so far, so it's okay? Tell me. And the client has also told you that it is not material. It's only 10 out of 1000. It's only 1%. Yes, tell me. Will you ask anything else? If yes, do let me know in the chat box. I'm actually waiting for you guys here. Yes, tell me. Will you actually wait for something here, or you will say, okay, 1% is there, but it is not material as far as the amount is also concerned, so that's okay. It's not fraud also. Yes, tell me. What do you say? What do you say? What do you say? Yes, what do you say? What do you say? Please tell me. I hope you understood the question. If not, please let me know. I'll repeat the question again. The question is very simple. I've told you one case that in my institution, out of 1000, I have identified that 10 students have not enrolled but have attended all the lectures due to technical fault. Okay. Now, what would be your instance on it? What would be your questions on it? Tell me. Yes. Okay, I'll repeat Chirag, not an issue. My question is that in my institution, I've told you, you are the auditor, and I've told you as the CEO that in my institution, out of 1000 students, 10 have done what? 10 have not enrolled in the courses but have attended it due to some technical issues. What would be your further questions to it? What would be your further questions to it? Tell me. What would be your further questions to it? Tell me. Yes. What would be your further questions to it? Tell me. Tell me. Yes. Even if you don't know, I don't know is also an acceptable answer. Not an issue. Not an issue. Yes. Even I don't know is also an acceptable answer. Okay, you are unable to figure out as of now. That's why we are attending the classes, no? So that's okay. But you need to respond. Okay. If you are available in the session, please respond. How they access? Yes. How they access? You might also ask that if 10 have done so far, what's to make us believe that more might not have done, right? Maybe you might not have identified it, but maybe more might have done it, right? So that would be the question. What are the technical issues, right? How there could be technical issue? What is the impact of it? What is the financial statement impact of it, right? What is the profitability impact of it? You will be asking so many questions, right? So, when you have done that, what you have done is you have exercised professional skepticism. Okay, what you have done is professional skepticism is a practice where an auditor is required to have a questioning mind. I'm not saying you have to be doubtful. I'm not saying that you have to be doubtful there. But what you need to have is you need to have a questioning mind. That is, whenever there is any information presented to you, you should be able to raise the right questions as far as the scenario is concerned. You should be able to raise the right questions. That is having a questioning mind. Okay, and you should be able to be alert towards situation that might pose a possible misstatement, that might result into a material misstatement, a possible material misstatement. That is, if there is any situation that might be converted into a material misstatement. In this particular case, even if 10 students have done so far and it is only 1%, it is not material for the company. However, what if 100 might have done it? What if out of 1000, 500 might have done it? Then it would have been very material, right? So that is why it is very important for us to understand under the professional skepticism, that is the basic attitude that is expected of the auditor, that you should have a questioning mind. You should be able to be alert towards situation that might pose a possible misstatement. Even if it is not a misstatement right now, but it could be a misstatement in future, so it might be converted into a possible misstatement, so you should be able to be alert towards it. And third thing is, you should be able to critically examine the evidences. Whenever any evidence is presented to you, you should be able to critically examine. That is, you should be able to evaluate it wholesomely and there should not be any issues. You should be able to evaluate it completely. Okay, yes, right, Chirag, you have raised the right question. So what you have done is you have exercised professional skepticism over here, and that's amazing. Yes. So if you are able to do it right now, that would be a very good exercise for you, because if you will be able to raise the right questions, then we will be able to have a very interactive sessions, right? Okay, I hope this is clear. So with this, we have completed the first part, which is basics of audit. What we have covered so far, we have covered the definition of audit, assurance, basic terminologies. We have covered about international standards on auditing. We have covered about audit procedures. We have covered about assertions. We have covered about risk, audit risk, IR, CR, DR, how is it related. Then we have covered about material misstatements. We have covered about types of audit evidences. We have covered about professional skepticism. Now let me answer you few questions that are not related to the syllabus directly, but are very important for you. First of all, is our full syllabus going to be in these handwritten notes only? Yes. Okay. Is it helpful for us? Very, very helpful. Why? Because we have covered everything into it, from all the publishers, from all the study hub things. We have covered everything. Okay. Is it written by me? Yes, it is perfectly written by me. Okay. Then now the important point is, will you be getting it? Yes, you will be getting the soft copies of it. Okay. Will you be getting the board notes also that I have written over here, because that would be really, really helpful when we move towards the advanced level? Yes, that would be very, very helpful for you, and you will be getting the soft copy of the board notes also. Okay. Now, any other questions? Any other questions that I could help you with before moving further? Any other questions that I could help you with before moving further? Yes. Please feel free to let me know on the chat box. Yes. Any other questions that I could help you with? Yes. Any other questions that I could help you with? Yes. Please tell me. Okay, will paid session will be on YouTube or website or any other meeting software. So for that you have to log into our website. I'll write it over here. Okay, so for that you have to log in to our website. I'll give you all the socials. Okay, so if you want to connect with me, first of all, for the lectures, so our website is www.bbvirtualsglobal.com. Okay, you can contact. I'll also mention a contact number in the comments, in the description. You can contact on that number also. Okay, to get the further details. Okay, now if you want to connect with me on Insta, my Insta handle is ACCA with CA Supreet Agrawal. ACCA with CA Supreet Agrawal. Okay, if you want to connect with me on YouTube, okay, I have a separate YouTube channel as well with the same name, ACCA with CA Supreet Agrawal. Okay, then on Telegram I am available with the same name, but that is the channel name, so it is written as follows: ACCA with CA Supreet Agrawal. Okay, I hope that answers your query. Yes, so these are all the contact details that I could give you. Okay, just in case you have any questions, you can also connect with me on LinkedIn. I am available on LinkedIn by the name of CA Supreet Agrawal. Okay, if you want to interact with me there, you can feel free to let me know. Okay, yes, I hope this answers your query. Okay, any other thing that you would like to ask here? So now we can officially move to chapter number 1 of our ACCA AA syllabus, and that chapter is very, very interesting. Let me tell you, this chapter is very, very interesting. Okay, so this is that chapter. The concept of audit and other assurance engagements. Very, very important chapter over here. Okay. Do you need a 2 minutes break, or is it fine? A 2 minutes break or is it fine? A 2 minutes break or is it fine? 2 minutes break or is it fine? 2 minutes break, or we can continue directly? What do you say? 2 minutes break or we can continue? What do you say? 2 minutes break or we can continue? Break? Okay, let's just take 2 minutes break. Okay, so it's 6:03. We'll start again at 6:05. Okay, we'll start again at 6:05, okay, so only 2-3 minutes break, and then we will continue. Okay, because we have to finish in next 40 to 45 minutes. Okay, so now we can officially start with chapter number 1. So can you define audit and assurance? Yes, you can define audit and assurance based on our previous discussion of basics of audit, correct? Now let us first understand that what are the objectives of this chapter. Okay, so in this chapter what you need to do is, you need to have following objectives answered. Number 1, identify and describe the objective and general principles of external audit engagement, not assurance engagements, external audit engagement. So what we have to define? We have to define the objectives of the external audit process. Okay, external audit, what is the objective? Okay, that would be given by ISA 200, International Standards on Auditing 200. Okay, then what we have to do is explain the nature and development of audit and other assurance engagements. Okay, although a lot of times the official text might not be available for this particular heading, but we will be able to answer it, not an issue. Okay, now concepts of accountability, stewardship and agency. What is the meaning of accountability, stewardship and agency? We have to explain, we have to discuss the concepts of it. Okay, then define and provide. What are these objectives? Who has given these objectives? So these objectives have been mentioned in the detailed study guide of ACCA body only, okay, for AA syllabus. So when we take any chapter, first of all what we will be doing is we would be understanding about what are the objectives from the ACCA body that we need to abide by. Define and provide the objectives of an assurance engagement. Now here we are talking about the assurance engagement, not just the audit engagement. So in the first heading, objectives of audit, here objectives of assurance engagements. Then what are the 5 elements? What are the 5 elements of an assurance engagement? What are the 5 elements of an assurance engagement? There are 5 elements, we will be discussing about it. Although you'll be surprised to know that we have discussed about all of these things or most of these things already in our basics discussion. Now describe the types of assurance engagement. What are the different types of assurance engagements? And we have to learn it by heart, we have to remember it for our further discussions also. Then last would be explain the level of assurance. Explain the level of assurance provided by an external audit and other review engagements. See, level of assurance could be different. No, the level of reliability and credibility that is increased by audit or other engagement might be very, very different. When we say review engagement, what do I mean by it? So I will be explaining you right now. Okay. And finally, one of the most important parts, true and fair presentation. What is the concept of true and fair presentation? All of these things we need to cover. First of all, tell me your first instance, first look. What do you understand from first look? Is it too much or is it like, okay, manageable content, or is it like too many objectives in one chapter? You tell me, what do you think? Too many objectives in one chapter or is it manageable? What do you think? Too many objectives in one chapter or is it manageable? What do you think? Yes, what do you think? Too many objectives in one chapter or is it like manageable? What do you think? What do you think? Yes. What do you think? Manageable, right? But I'll tell you, you'll be surprised to know that we will be managing it just in 8 to 9 pages, okay? And we will be covering every such heading line by line, okay? So see, first of all, we will be starting with objectives of an auditor, then we will be going for nature and development, then we will be going for concept of accountability, stewardship and agency, then we will be going for assurance engagements, then we will be going for elements of an assurance engagement, then we will be going for types of assurance engagement, and then finally we will be going for level of assurance provided by different types of engagements, and then true and fair view presentation, and finally the expectation gap. Once we cover all of this, the chapter would be completed, right? And we have covered all of these things in 8 to 9 pages, and that is the beauty of these notes. When I say these notes are going to help you, these are actually going to be very helpful for you. Okay, now let's start. Objectives of an auditor. What are the objectives of an auditor? So the auditor has 3 objectives. First of all, before understanding in detail, please understand in brief. Number 1, to obtain reasonable assurance. Where we will be learning about this reasonable assurance in detail, we will be learning about it here. I'll show you. We'll be learning about it here, reasonable assurance. Okay. However, let me explain you. Okay, let me explain you. When I say to obtain reasonable assurance, what do I mean by it? Reasonable assurance means high level of assurance, but not absolute. As in not 100% assurance, but high level of assurance. Not 100% assurance, but high level of assurance. Say any assurance of 90% or above is known as reasonable assurance. Okay, there's a chat. Okay. Acceptance of audit, that would be covered in later chapters. That there's a separate section of it. We will be learning about it in detail. Okay, when we will be learning about ethics and all, we will be learning about it there only. Okay. Yes. So it is not whatever we have studied in basics, we will be studying everything in detail later on also. I just gave you the basics so that you can be able to connect it. Okay. Now to obtain reasonable assurance, about reasonable assurance as in high but not absolute assurance. Okay. About whether the financial statements as a whole are free from material misstatement, whether due to fraud or error. We will learn about it, but before that, the second objective is to express an opinion. We have discussed about that in case of assurance or audit engagement, we issue an opinion. So second objective is to express your opinion. Number 1, to obtain reasonable assurance, to obtain, not give, to obtain reasonable assurance. That is, we have to obtain the assurance first for ourselves and what is our opinion, and then we have to express that opinion. And to report on the financial statements. These are the 3 objectives that are given. See, before learning full, you have to learn these 3 points: to obtain reasonable assurance, to express an opinion, and to report on financial statements. Once you remember these 3 things, rest of the things would be easy for you. Do you need to remember it by heart just now? If you do, it's good, but even if you don't do, we will be revising it so many times that you will be able to learn it by the time we complete few more chapters. Okay, so to obtain reasonable assurance about whether the financial statements, we have already discussed about what are financial statements, the 5 financial statements as a whole, okay, not individually, not item wise, but as a whole, are free from material misstatement. Free from material misstatement as in, material means what? Material means anything that has the capability of impacting the economic decisions of users of financial statements, and misstatement means what? Difference between what is and what should be, that we have already studied, right? So whether financial statement as a whole are free from material misstatement, that is, there is no material misstatement. Okay, when I say free from material misstatement, am I saying, please answer me on the chat box, am I saying that there are no errors? Please answer me. There are no errors. Am I saying that there are no errors? Am I saying that there are no errors? Am I saying that? No, I'm not saying that, right? There are no material misstatements, that is in knowledge of auditor, whether due to fraud or error, as in, be it due to fraud, be it due to error, there is no material misstatement in the financial statements. That is, financial statements are free from material misstatements. So what we need to take the assurance on? To obtain reasonable assurance about whether the financial statement as a whole, is that word relevant here? Yes, this word needs to be remembered. Okay, this word needs to be remembered, as a whole, are free from material misstatements, whether due to fraud or error. Then, to express an opinion on whether the financial statements are prepared in all material respects, whether the financial statements are prepared in all material respects. When I say material respects, as in that considering materiality, say in my case 100 rupees was not the materiality, 1 lakh rupees was not the materiality, but maybe 1 crore was the materiality. So considering materiality in mind, in all material respects and according to the applicable financial reporting framework. Now what is the meaning of this term? Applicable financial reporting framework. What is the meaning of this term? Applicable financial reporting framework. So this means the legal framework under which the financial statements are prepared. It could be, say, IFRS, it could be Ind AS in India, it could be IGAAP, it could be US GAAP. Okay, so whatever are the framework under which the financial statements are prepared, that is called as applicable financial reporting framework. Okay, now to report on the financial statement, last one, to report on the financial statements and communicate, to report on the financial statements and communicate as required by the ISS in accordance with the auditor's findings. That is, whatever ISS says, it's not saying how you need to communicate, whatever ISS says, because in every ISA we will be seeing different points of how do we need to communicate it to the management or the public at large. Okay, so as required by the ISS in accordance with the auditor's findings, whatever are the auditor's findings, how we will be able to report it, how we will be able to communicate about it. Now let's read full definition. Okay, full objectives. So there are 3 objectives: to obtain reasonable assurance, to express an opinion, and to report on financial statements. Number 1, to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error. Okay, to express an opinion on whether the financial statements are prepared in all material respects in accordance with an applicable financial reporting framework, and to report on the findings and communicate as required by the ISS in accordance with the auditor's findings. I hope the objectives are clear. Who has given these objectives? Who has given these objectives? So these are given as per ISA 200. What is the title? Overall objectives of an independent auditor and conduct of an audit in accordance with international standards on auditing. As per ISA 200, these objectives are given. Okay, do you need to remember these standards, names, numbers? Definitely not. Okay, you need to understand the concepts of it. Okay, is it me who is saying this? No, the ACC body has said it, so no worries on that. Okay, no worries on that. Okay, now nature and development. So traditionally I'm talking about the nature and development. Okay, so first of all, what we have done, we have ticked the first part. We have identified and described the objectives and general principles of external audit engagements. Now we are going for the second part, which is nature and development. That is, traditionally the auditor's job was majorly focused on identifying the frauds. Okay, fraud identification was considered as one of the main jobs of the auditing profession. However, now auditing profession has increased a lot. Now you will see that auditors are responsible and even sometimes blamed for not complying if their client has not complied with corporate governance procedures, if they have not complied with, say, FEMA procedures, if they have not complied with any of other laws and regulations, In fact, there's a specific standard that has been created for auditor to go even for the non-financial item, which is other information, say in the form of annual report. So auditor has the responsibility given by standards now, statutory responsibility given by standards to read the annual report and see if there is any material inconsistency and report it. Auditor also needs to report on the internal controls like we have discussed. So there are a lot of non-financial parameters also that has been added now. So traditionally, the auditor's approach was majorly focused on fraud detection and ensuring records were correct, not true and fair, correct. However, if you see now, so auditor's job is majorly to provide independent assurance on whether the financial statement present a true and fair view, and now there are expanded roles into corporate governance, risk management and non-financial reporting. You will see that the auditor needs to issue certain reports which are in the form of internal control report, which are in the form of other information report, and we have to report on certain specific items also sometimes in certain countries. For example, in India there is CARO, so there are 21 points. Some of them are financial, some of them are non-financial. Non-financial points include whether the payment has been done on timely manner or not. See, what amount of payment has been done, that is a financial matter. Whether it is done on timely manner, it is not a financial matter, right? So that is very, very important to understand here. So I hope this is clear. Traditionally, the role of auditors was majorly focused on fraud detection. Now it is focused on independent assurance on true and fair view. Earlier it was correct view. Here there is true and fair view. What is the meaning of it? The last topic is that we will be covering it over there in detail. Okay, and now we have also stepped into the shoes and we have been reporting on corporate governance also. We are being given the responsibility of reporting on corporate governance, other laws and regulations, sometimes other information also. So that becomes really, really important here. Okay, I hope this is clear. I hope this is clear. Do let me know. I hope this is clear. Yes, I hope this is clear. I hope this is clear. Yes, I hope this is clear. Okay, now let's go for the third one, but before that let's take the objectives. So the second objective is also done, which is explain the development of audit and other assurance engagements. Okay, now the third one, discuss the concepts of accountability, stewardship and agency. Okay, so let's discuss about each one of them: accountability, stewardship and agency. Let's discuss first, what is the general English meaning of accountability? Accountability in Hindi we call it as jawabdehi, right? But when I say accountability, what do I mean by it? That is, I am answerable. That I am answerable. Okay, that I am answerable. So accountability is where one party is held responsible or answerable to another party. That is, if I say that I am accountable to Mr. A, then I am answerable for my actions to Mr. A. Okay, if I say I am answerable to my parents for certain activities, so I have to answer if they ask. For example, my employees, my staff are answerable to me. If they do anything that is professionally right or wrong, I can ask questions and they need to respond to me. So they are professionally answerable to me. It will be required to justify its actions and decisions to that party. That is, if I am accountable to somebody, I will have to justify my actions and decisions to that particular party. For example, in my case, I have a team of say 5 people. Those 5 people are answerable, accountable towards me. That is, whatever their professional actions are, they have to justify it to me. They have to explain it to me. They have to explain their decisions to me. Okay, so actions and decisions, justification to that party. Okay, I hope accountability is clear. Now, stewardship. What is stewardship? Stewardship is the practice of managing other person's property. A lot of times it happens. For example, let me give you an example here. If there's a company, say SIL, okay, there's a company SIL. It has 1 lakh outstanding shares. Okay, I own 100 shares. I own 100 shares. Okay, who is the owner of the company? Am I the owner of the company? Can I say that I am the owner of the company? Can I say that I am the owner of the company? Can I say I am the owner of the company? Tell me, can I say I am the owner of the company? Can I say I am the owner of the company? Yes. Can I say I am the owner of the company? Can I say I am the owner of the company? Yes. Tell me, can I say I am the owner of the company? Can I say I am the owner of the company? Tell me, can I say I am the owner of the company? What do you say? Can I say I am the owner of the company? Yes, I can say I am the owner of the company, right? But do I go and manage the company? Do I go and manage the company? No. you know, there are directors in that company who manages the company for me, these directors could be again the shareholders, or these could be different parties also, but these are officially employees of the company and they manage the company, right? So stewardship is the practice of managing another person's property. In this case, the directors are managing my property. I am the owner of the company and they are managing my property. So directors of a company is a beautiful example of stewardship. Stewardship is what? Stewardship is a practice where a person manages another person's property. Okay. Now the third one, agency. Although this is more from the point of view of law, but it is specifically important for your audit also. Generally it is said that partners of a company are agents of each other. Partners of a firm are agents of each other. Partners of a, yes, correct, Chirag, director, manager, shareholders, owns, yes, partners of a firm are agents of each other. Why do they say that partners? Let me write it over here. Yes, let me write it. Example, partners of a firm are agents of each other. When I say partners of a firm are agents of each other, it means that whatever partner A would do, partner B would also be held liable, would also be held responsible for it. Partner A would also be, whatever partner A does, partner B would also be held liable, responsible for it. That is known as the concept of agency. That is known as the concept of what? Agency. Agency is when two persons are liable for each other's actions. So an agent is an individual or another entity. It could be an individual, it could be a firm in this particular case. Okay. So an agent is an individual or another entity employed or used to provide a particular service. In this case, the partners are being hired by the firm to provide services on behalf of the firm. The person using the agent is called as the principal. You know, there's a beautiful line in case of partnership. Whenever you discuss about the partnership firm, there's a beautiful line there, that is, partners are both principals as well as agents of each other. Why? Because they both are liable for each other, that makes them principal of each other, and they both are also liable for the other one, that makes them agent also. So partners are liable as well as agents of each other. Okay, that is very, very important. So agency, an agent is an individual or another entity employed or used to provide a particular service. The person using the agent is principal. Are these definitions sufficient for you to remember? Yes, these are sufficient. Okay, even if you check the ACCA study hub, all of these definitions are only given, so you do not need to learn anything else. These definitions are appropriate, and whatever marking, whatever examples I have given, you need to remember it. Okay, now let's move further to the assurance engagement. Now when I say assurance engagement, what do I mean by it? Although I have already explained it to you, but now let me tell you a little more technically. Okay, so an engagement in which a practitioner means who? Practitioner means auditor, in simple terms. Practitioner means auditor. If I consider audit as an assurance engagement, so directors are agents. No, directors might not be agents. In case of directors, you have to look at the roles and responsibilities of them. What kind of role do they have? If they are just employees, yes, they might be called as agents, but you have to see whether they are acting as agents or principals. Generally, directors are agents. Generally, yes, but not always. Okay. Now, an engagement in which a practitioner expresses a conclusion. Now, the word here is not opinion, the conclusion, because in case of assurance engagement, there could be a conclusion also other than the opinion. Okay, designed to enhance the degree of confidence of the intended user, not everybody, of the intended user, not of everybody, of the intended users, other than the responsible party. Who is the responsible party? So intended users are generally the general public. Okay, or I would say stakeholders. Who are stakeholders? Anybody who is either interested in or are impacted by the company. Responsible party, management. Who has prepared the financial statements. Okay, about the outcome of the evaluation or measurement of a subject matter. What is the subject matter? The financial statements. Subject matter that has been evaluated are the financial statements. And against criteria, this means what? The assertion. We have discussed about assertions, no? Completeness and everything. So these are assertions. Okay, I hope this is clear. Okay, so an engagement in which a practitioner or an auditor expresses a conclusion or opinion designed to enhance the degree of confidence of the intended users in the form of stakeholders other than the responsible party, because you are not issuing your report to the responsible parties or the management. You are issuing your report for the purpose of stakeholders, for the purpose of users, for the purpose of general public. Okay, about the outcome of evaluation, that is what has been the conclusion of the evaluation and measurement of a subject matter, that is the financial statements, against criteria. That is, when you have evaluated the subject matter, that is the financial statements, against the criteria, that is the assertion, what has been your conclusion, and when you give this report for the purpose of public, for the issue, you issue this report for the purpose of public or stakeholders, then that is known as an assurance engagement. Okay, understood this point? Understood this point? Understood this point? Now, typical assurance services includes what? See, all the external audits are also covered over here as part of the assurance engagement only, but there are typical other services also. Audits of financial statements and reviews of historical financial information. Audits we already discussed, but reviews, what are reviews? See, although we will be having a good discussion in the next 1 or 2 slides only, when we will be discussing about the opinions or engagements. However, reviews are generally the quarterly reviews, limited assurance engagement. What is limited assurance? We will be discussing it after 1 or 2 slides here. Okay, but limited assurance engagements, or when you might have heard that the listed companies, at least in India or some other countries also, are required to publish their results, not the audit results, on a quarterly basis. They issue their statement of profit and loss, right? So that is known as review engagement. In that case, auditor does not perform all the procedures. You remember those procedures where we discussed about ICA, IORR. So generally inspection is not done, confirmation is not done, inethical procedure is done, inquiry is done, observation is not done, recalculation is not done, reperformance is not done. Generally inethical procedures and inquiry is done, and that is known as review engagement, limited assurance engagement. Okay, understood? Yes. Now, prospective financial information review, that is, I have told you, sometimes what happens is we prepare the financial management prepares the prospective financial statement for the purpose of say financial modeling, for the purpose of say loan statement, a lot of times. So if you are being given the task of reviewing it, that is also an assurance engagement, not an audit engagement. Risk assessment, we have discussed about identification of risk, assessment of risk. Sometimes there is a specific assignment that is given. It is also called as, in general terms, it is also called as internal audit assignment. Okay, I'll write it over here as an example. Example, internal audit. That is also called as internal audit. Okay, that is also called as what? The assurance engagement. Then value for money audits. What is value for money audit? Sometimes companies hire the auditors to ask them to check whether the decisions that are being taken, whether they are value for money or not. That is, whether they are full of utility or not, whether there could be any other decision that would have resulted into more significant benefits, for more significant savings, or for more significant earnings here. Then system and controls reliability. A lot of times auditors are being hired for the purpose of testing the reliability and efficiency of the systems of an organization. Okay, so that is systems and control reliability. Now elements of an assurance engagement. Elements of an assurance engagement. So we have already discussed it. Let's just read it. What is the subject matter? What is the subject matter? We have discussed it. Subject matter is the financial. Subject matter is what? Subject matter is the financial statement. Subject matter is what? The financial statements. Okay, the subject matter is the financial statements prepared under the applicable financial reporting framework, for example IFRS, in our syllabus, right? Then there's a three-party relationship. See, directors are the responsible parties, the management who prepares the financial statements, then there's practitioner that we have named as auditor, and then shareholders that are known as intended users, shareholders or stakeholders. Okay, what are the criterias? What we have discussed? Criterias, what we have discussed, the criterias. Criterias are the assertions, right? So the criterias are the assertions or the points under which it would be evaluated. So the criteria used to evaluate the financial statements, including the financial reporting framework. For example, if I have to evaluate property, plant and equipment, I will take what? Existence, I'll take what? Completion, I'll take what? Presentation, disclosure, I'll take what? Valuation. However, if I have to evaluate say revenue, so I cannot take existence. What I'll have to take? Occurrence. Existence or occurrence. Occurrence is for P&L items. So occurrence. I'll not be able to take valuation because we do not value the transaction. We measure the value of the transaction, right? So measurement would be there. So the criteria used to evaluate the financial statements include the financial reporting framework. Okay, we will be having a good discussion about it later on also at the relevant stages. Don't worry about it. Now, the external auditor plans and performs the audit engagement to obtain sufficient and appropriate evidences. When I say sufficient and appropriate audit evidences, although we have not covered it here because we will be covering it when we would be discussing about ISA 500 series. That full series is depending on the audit evidences only. However, if I have to tell you now, what do we mean by sufficient? What do we mean by sufficient? So, sufficient is talking about the size of the samples or quantity of the samples. Say there have been 10,000 transactions of sales, okay, and I have to take the samples. So if I say I have taken 25 samples statistically and they represent the population, so whether that size 25 sample is appropriate or not, that is known as sufficient. And appropriate, whether I have taken the relevant and reliable samples or not. Relevant and reliable samples or not. When I say relevant and reliable samples, what do I mean by it? That is whether I have taken the samples which are purely sales. Maybe I might have included sales returns also, credit notes also, debit notes also. So I have done that, or I have taken the relevant and reliable samples. So sufficient and appropriate. Okay, so the external auditor plans and performs the audit engagement to obtain sufficient and appropriate evidences in the form of documentation, supporting explanations to support the expression of an opinion. That is, when they express their opinion, whether they are backed by sufficient and appropriate audit evidences or not. This is a technical language, sufficient and appropriate audit evidences. Okay, an opinion is an assurance report. An opinion is a what? Assurance report. Okay, so what are the 5 elements? The subject matter, the 3-party relationship, the criteria, the evidence, and the assurance report. The report that is created is the assurance report. Will you be able to answer these 5 criteria? Will you be able to answer these 5 criteria? Is it very tough to remember? Definitely not. No, because there is the subject matter, there is 3-party relationship, there is evidence, there is assurance report, and there is criteria. Once you remember all of this, you have to remember that particular definition that I have given you. That a practitioner does what? Evaluates the subject matter given by the responsible party against certain criteria to issue an opinion via verification of evidences. Once you remember that, you will remember these 5 points. Okay, I hope this is clear. I hope this is clear. I hope this is clear. Yes, please allow me 1 second. Okay, I hope this is clear. CREST, CREST. Okay, I'll not ask you to remember all of these things via these methods always. Why? Because see, if we create a lot of mnemonics, we might get confused later on. So what I'll suggest is that we remember through concepts. For example, it is not tough to remember that what a practitioner does. A practitioner evaluates the subject matter, which is the second point. The subject matter against what? Against certain criteria. The subject matter is given by whom? The responsible party, and the evidence is tested and the conclusion report is issued. So it is not a very tough thing. It is like a process. So I'll not ask you to remember through CAST or any other thing, because this is something that we should understand as part of the audit and assurance process. This will help us to understand it in a further way also. Understood this point? Understood this point? I hope this is clear. I hope this is clear. Yes. Now, types of assurance engagements. When I say types of assurance engagements, what do I mean by it? When I say types of assurance engagement, what do I mean by it? When I say types of assurance engagement, what do I mean by it? Okay. Yes, that definition itself says all of this. That's why we do not need to mug up anything. Okay, we will try to create the mnemonics only when it is required. Okay, otherwise we will not. For example, ICAI ORR helps you, right? Otherwise, we will not be able to remember anything of that sort through mnemonics. Now, because we will be so solid on the concepts that we do not need any mnemonics or anything. Wherever there would be requirement of any mind mapping or anything, I'll myself create it, not an issue. Now, types of assurance engagement. When I say types of assurance engagement, so what are types of assurance engagement? So number 1 is reasonable assurance engagement, another one is limited assurance engagement. Now I'll tell you what do I mean when I say this. What do I mean when I say this? Okay, see, what happens is that there are audits, there are reviews. Audits are what? Generally audits are conducted once a year. Okay, the requirement is to verify all the evidences, take sufficient and appropriate audit evidences, perform all those ICAI ORR procedures, and frame our opinion and issue it. Whereas in case of review, we first of all we do not give reasonable assurance, we give limited assurance. Limited assurance is what? Low or moderate level of assurance. Okay, and what we need to do is we need to perform only two procedures, that is inquiry and analytical procedures. Okay, now what is reasonable assurance? In case of audits, example is audits, provides a high level of assurance. High means what? More than 90%, but not absolute, by expressing a conclusion in a positive format. When I say positive form, what do I mean by it? That we specifically write a sentence. You specifically write a sentence that we have verified the evidences and we frame a conclusion that the items presented are in a true and fair view. Okay, then practitioner should obtain sufficient appropriate evidences. Do we know the meaning of sufficient and appropriate here? Sufficient means size or quantity, and appropriate means reliability or quality. Okay, relevance, reliability or quality. Now assurance engagement risk should be reduced to an acceptably low level. When I say assurance engagement risk, what do I mean by it? The audit risk. Assurance engagement risk means what? The audit risk. Audit risk should be reduced to an acceptably low level. Assurance engagement risk should be reduced to an acceptably low level. When I say acceptably low level, what do I mean by it? That is, for example, if we have to issue a reasonable assurance, okay, reasonable assurance, then what we need? We need at least 90% or above assurance, right? So acceptable risk would be what? Acceptable quantum of risk would be what? Up to 10%. So risk should be reduced up to say 10% here. Okay, risk should be reduced up to say 10% here. See, there would be little calculation points, computation points also regarding this under the ISA 300 series. When we will be going for the planning stage, the materiality calculation, we will be doing all of these calculations again. You remember it, IR into CR into DR, we'll have to solve certain numericals on that to get the concept clear over this. So assurance engagement risk should be reduced to an acceptably low level. Understood this point? Understood this point? Understood this point? Understood this point? I hope this is clear. Yes, I hope this is clear. Yes. Now limited assurance engagements reviews. Okay, so examples are reviews. Provides a limited or lower level of assurance. Limited or lower level, that is either moderate or lower level of assurance, but at least to the acceptable level. Okay, by expressing a conclusion in a negative form. When I say negative form, you know what do we write in the report? In the later sections of our classes, we will also see certain reports which are given positive, which are given negative form of expression. You know, generally what kind of words we use in negative form of assurance? We say that we have verified and nothing has come to our light. Nothing has come to our light which says that there is something wrong. That is, in case of positive form, we say that we have verified and we have gained the conclusion, we have obtained the reasonable assurance that items presented are presented in true and fair, okay, manner. However, when we say for limited assurance or negative form, we say nothing has come to our attention that makes us believe that it is not true and fair. Okay, so that is very, very important here. Although I have also written the words here, so it will be easier for us to understand in the next slide. Okay, so don't worry about it. Now evidence is obtained through inquiry and analytical procedure. Have we covered it that we only perform two procedures? Is there any calculation performance for audit risk and exam? Sometimes yes, we will definitely learn it, because even if it is not generally asked, but it could be asked, and we will not leave any stone unturned to score great marks in our AA paper. Okay, so evidence is obtained through inquiry and analytical review. In fact, even if there is not a separate question on that calculation, but that might form part of the calculations for materiality and for planning stages. That's why we will cover it. Now assurance engagement risk is more significant but still acceptable. Why it is more significant here? Because the level of assurance is less, so the risk would be more. See, we have already discussed this, that what happens is whenever we try to obtain the assurance, okay, if your risk is low, you obtain less procedures, you conduct less procedures, you obtain less evidences. However, when your risk is high, so definitely when your risk is high, you will have to perform more procedures to get the same level of assurance. So in this case, assurance engagement risk is more significant but still acceptable, because it is a low assurance engagement, therefore the risk is a little high, inverse relationship. Okay, I hope this is clear. Any questions? 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 Any questions? No? Okay. Now let's go for this discussion. Okay, do we have to write in technical language or explain in simple language work? See, whatever we are studying over here, nothing is simple language. All of these are technical languages. But what we have taken the liberty, we have presented it in such a form that if you are reading it, you are thinking that it is a simple language. But tell me, is criteria simple language or it is a technical language only? Is sufficient and appropriate a technical language or a simple language? You tell me. You tell me. What do you think? Right? So that is very, very important, because we have written it in such a way, we have presented, we have taken the liberty of presenting it in such a way that you will also think that what we are studying is very simple. But actually we are studying all of the things in the technical language only. We have not covered anything in the simple language. All of this that we are studying, you can simply write it in the examination, not an issue. Okay. Now, first of all, let's go back to the objectives and ticket. So have we covered the concepts of stewardship or accountability and agency? Yes. Okay, yes, technical but simple. But what we have done is we have taken the exact words, but we have presented it in such a way that you will be able to understand in a good flow. Define and provide the objectives of an assurance engagement. Have we covered those? Yes. Explain the 5 elements of an assurance engagement. Yes. See, here you have covered about the assurance engagement. Here you have covered about the assurance engagement. Here you have covered about the elements, 5 elements, right? Then describe the types of assurance engagement: reasonable assurance engagement, limited assurance engagements. Now we are going for the last topic, where we are going to discuss about the level of assurance provided by an external audit and other review engagements, and the concept of true and fair presentation. I hope this is clear. We are going for the last one. Okay, we are going for the last one. So the last one is, last 2 slides are level of assurance provided by what? External audit and other review engagements. We have already covered it. In case of external audit, we provide reasonable assurance, which is high but not absolute, which is high but not absolute, high but not absolute assurance. We issue positive opinion, and in case of positive opinion, what are the words that we use in our report? In our opinion, the financial statements present fairly. Okay, we issue true and fair view. What is the meaning of true and fair view? We will be covering in the last slide. Okay, now other review engagements, we issue limited assurance. Negative opinion is there, that is nothing has come to our attention. The words that we use are nothing has come to our attention that causes us to believe. Is this good for you? Is this good for you? Yes. Is this good? Yes. Now I'll tell you about 2 other types of engagement. See, we have discussed about audit, we have discussed about review. Reviews are the quarterly reviews of listed companies, but there are certain other assurance engagements also. Other assurance engagement in the form of, say, review of prospective financial information, right? Say a lot of other things that we have discussed about, say system efficiencies and all. So can be reasonable or high, that depends on the engagement to engagement basis, that the assurance that you are giving is reasonable or high. That depends on the engagement. For example, in case of system issues, in case of process audits, in case of internal audits, you might be giving a reasonable assurance, you might be giving a low assurance, you might be giving a high assurance. Okay, that could be dependent. When I say agreed upon procedures, now this is a very specific assignment. When I say agreed upon procedures, this is generally done in the context of corporate governance. Okay, what happens is, in case of corporate governance internationally, there's one agreed upon procedures report. So in case of corporate governance, the company is required to give multiple disclosures. So there's a specific assignment by the name of agreed upon procedures. As the name suggests, in this particular engagement, we agree the procedure. For example, one of the procedure could be that auditor will do what? Auditor will cross verify that the amount of auditor's fees mentioned in the corporate governance report matches with the financial statements and their books. Okay, so what we perform? We perform only the specific procedures that are agreed in the engagement letter only. That is known as agreed upon procedures report. First of all, please confirm if you understand this. Please confirm if you understand this. Please confirm if you understand this. Yes? Do you understand it? Agreed upon procedures report. Do you understand it? Agreed upon procedures report. Okay. But in this case, no assurance is provided, because you are not verifying anything. You are not doing anything. You are just performing the bare minimum procedures, like you have cross verified it. That's it. You have not evaluated it against any evidence. You have just evaluated that whether the financial statements states the same amount or not. What if the financial statements are also wrong? Then you are not responsible, right? So that is why no assurance is provided. Only factual findings are being tested, and that is why in this case no assurance is there. So let's summarize. In case of external audit, the assurance is provided what assurance is provided? Reasonable assurance. Let's summarize. In case of external audit, what assurance is provided? The reasonable assurance is provided. In case of other review engagement, the assurance that is provided is limited assurance. In case of other assurance engagement, the assurance that could be provided is either reasonable or high. When we talk about the agreed upon procedures, no assurance is provided, as in no assurance, because we are only doing the factual findings. We are only factually matching the facts. That's it, nothing more than that. It means review. Is it means review for agreed upon? No, no, no. Agreed upon procedures are separate assignments. See, there is audit, there is review, there is other assurance, and then there is agreed upon procedures. Okay. Okay. So do not confuse review and agreed upon procedure. In case of review, you issue limited assurance, whereas in case of agreed upon procedure, you do not issue any assurance. There is no assurance because you are just mentioning yes or no. One of the agreed upon procedure could be whether the amounts are matching with the financial statement. So you just write yes or no. Okay. That is why it is agreed upon procedure. Now the last part, please try to understand it very well, because this is like the foundation, one of the foundational concept of your auditing, true and fair view. Because in the modern concept, auditors are required to issue the opinion whether the financial statements presents true and fair view, right? So that is why it becomes very, very important for us to identify what is true and fair view. Let's break the words. True and fair. True means what? Financial statements are free from material misstatement. Do we understand the meaning of material misstatements here? Yes. Free from material misstatement. Financial statements are presented accurately and reflect reality. That is, whatever has happened in reality, that is being reflected in the financial statement. That is what true is about. Okay, that is what true is about. Okay, and the financial statements comply with the regulatory framework, which means IFRS, India's requirements. They comply with that requirement. That is what is depicted by true. When I say true, okay, true would generally mean that whatever has happened, you have fully disclosed it in your financial books. Okay, but when I say fair, you have to go to the concept of substance over form. I hope you remember the concept of substance over form. Substance over form, that is very, very important. Substance over form. Substance over form, as in you have to look beyond the expected items, you have to look beyond the legal form, and you have to go for the economic substance of that particular item. So financial statements are presented neutrally and without any bias. Fairness covers that, and the economic substance of the transaction should be presented rather than the legal form. And that is why you will see a lot of adjustments in case of IFRS and IAS. For example, you must be aware about leases, right? People used to do what? I'm just taking a rough example here. So people used to do what? People used to take the asset in somebody's name, and they used to lease it back to them for, say, the full life of the asset. So for example, I have wanted this remote. What I have done is I have adjusted it. I have bought it in the name of my wife, and I have taken it on rent from her. Now this remote had a life of, say, 3 years, and I have taken it on lease from her for 3 years only. So majorly I have just done this transaction on her name to change the ownership of the item, correct? So that is why this is also covered under my item only via right to use asset and lease liabilities that you must be aware about under leases, correct? So we have to look beyond. We have to look beyond what? We have to look beyond the legal form, and we have to go for the economic substance of the transaction, and we have to report on that. That makes the report fair. Auditor's responsibility is what? Auditor's responsibility is to ensure that the items presented are true and fair. Okay, I'll go back to the overall objectives and will make you read this. To obtain reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error. To express an opinion whether the financial statements are prepared in all material respects in accordance with an applicable financial reporting framework, and to report on the statements and communicate as required by the ISS in accordance with the auditor's findings. Okay, so see, true and fair becomes very, very important over here. Now, have we covered the last objective also? Yes. That brings us to the end of the chapter. However, there's one extra concept that I have covered for you, which might be relevant for you, although it is not given as part of the official syllabus, but this might be relevant for you. The expectation gap. What is expectation gap? What is expectation gap? See, what happens is, whenever you will see any news coming up against auditors, you will see that public says that auditor should have checked this, auditor should have checked that, auditor should have done this. Maybe those people are not aware about what are the actual auditor's responsibilities. We are studying that here, that auditor's responsibility is something, but people say that whatever fraud has happened, it should have been identified by the auditors. That is not true. Auditor's responsibilities are limited. Auditor's responsibilities are to perform the procedures as explained by the standards. Once they have performed the procedures and nothing has come to in their attention, then it is not the auditor's fault. So there is a concept of expectation gap. When I say expectation gap, what do I mean by it? When I say expectation gap, the difference of what the users of financial statements believe auditors are responsible for and what are the actual auditors' responsibilities. That is, if auditors are responsible for say X thing and people are expecting them to be responsible for say Y thing, then this is the expectation gap, because people think that whatever fraud, whatever error has been identified, that is the fault of auditors. However, it is not true. Auditors' responsibility is towards asking the right questions, performing the relevant procedures. Once they have asked the right questions, once they have performed the relevant procedure, then auditor's responsibility is done. If they have not acted negligently, then they have performed their duties, and even if there has been a fraud which has not been detected by them, it's fine. It's fine. Okay, it's not the auditor's responsibility to identify every fraud and error, and we will be learning about it in detail in the next few chapters also. So that is known as expectation gap. I hope this is clear. Please let me know in the chat box if this is clear. Yes. Yes. Now, areas of expectation gap, that is why expectation gap happens or where expectation gap happens. Generally, fraud and error. Whenever any fraud or error happens, people say that it should be identified by the auditor. Is it true? No, definitely not. Auditor has limited responsibility over there. We will be discussing about certain standards which are particularly related towards identification or auditor's responsibilities towards fraud and error in an audit of financial statement. So we will be learning about it, that what are the auditor's responsibilities related to fraud. Generally, people think that every fraud that has been identified is the fault of auditors. It is not true. Then role of management and auditor. You know, when I used to work at one of the big fours, people used to say that how much time do you spend? They used to ask me. Okay, I'm the auditor. They used to ask me. General people used to ask me that how much time do you spend in preparing the financial statements? And I used to tell them it's not my job to prepare the financial statements. Management prepares the financial statements. And then they used to ask me naturally that what is your job then? And I used to tell them that my job is to evaluate it, my job is to review it, my job is to issue opinion on it after application of all the audit procedures and obtaining evidences and evaluation of evidences. So they used to get surprised that, oh, you guys do not prepare the financial statements. So then I realized that this is a big expectation gap. That is, people think people are not clear about the roles and responsibilities of auditors as well as management, and that needs immediate understanding, that needs understanding, and that results into an expectation gap. Okay, so with this we have officially covered chapter number 1. We have covered all the objectives of chapter number 1. Like we have discussed objectives, we have discussed nature, we have discussed growth, we have discussed concept of accountability, stewardship and agency, we have covered assurance engagements, we have covered elements of an assurance engagement, we have covered types of assurance engagement, we have covered levels of assurance provided by various engagements, we have covered true and fair view, and we have covered expectation gap. I hope with this you are able to understand everything, you are able to cover everything, and I hope you like the lecture. Now the next lecture would be on Wednesday at 8 p.m. and what we are going to do, we are going to cover chapter number 2, and we will be solving certain questions as well, which are the exam questions, so that you can get that whether you are able to apply it in the class or not. Okay, I hope you liked the lectures. Now if you want to buy full course, that is you want to go beyond lecture number 3, because up to 3 lectures would be available on YouTube, but beyond that would be on our website. So you can go to our website bbvirtualsglobal.com. you can connect with me on my Instagram, YouTube, Telegram. Everywhere I have the same username, which is ACCA with CA Supreet Agrawal, and I have a LinkedIn account. If you want to communicate with me anything, I have a LinkedIn account by the name of CA Supreet Agrawal. Okay, so hoping to see you in further sessions. Next session would be on Wednesday at 8 p.m. Just in case if there would be any changes, we would be posting about it. I would request you to please subscribe to the channels here so that we can communicate further. Thank you so much.